Good Friday morning to you. I'm Pete Najarian. This is The Take for Market Rebellion. And I'll tell you what, we have had nothing but craziness in this marketplace. We know that. It's been going on for a while now. But before we even jump into yesterday, which was an unbelievable day, how about if you just look at the last week or so? We were up 829 points, followed up by 460 points to the upside. Nice start and move. Oh, then we're down 300. Then we're down 300. Then we're down 280. Oh, then let's just focus on yesterday. That was an accelerated move that just never did stop, and it just continued on all the way from bell to bell and pushing lower throughout the session and finishing off 1,800 points. That's a pretty significant move to the downside. Concerns about the reopening. So it really depends on every single day where the market's real focus is. Is the market focused on the reopening of the economy and how that's progressing? Is the focus on, hey, the reopening of the economy is going too fast and we're starting to see a spike in cases? Is it the Fed? Is it so many different elements that can go into each and every day and where the markets really kind of dig their hands into to see where the market's going to be shifting and moving around. And this rotation has been accelerating and extremely fast. And we're going to talk about a little bit of that. But what if I told you, and this I think is a really interesting nugget. Well, first of all, let's look at the volatility index because that I think says it all. So we were all down towards 24, 25 on the most recent lows of the VIX. Well, yesterday we started off the day around 31, 32, held on there till about noon where we pushed up to about 35. And then in the latter part of the day, the final hour, we got into the 40s, the low 40s. That's a pretty significant move. And as a matter of fact, a good friend of mine provided me some information. He said, Pete, the VIX up 48%. That's the 8th biggest spike, one-day spike in the VIX ever, all time. That really says a lot. It tells us about how much volatility really is in this marketplace. And that's why when you're looking at it, and we've talked about this as well, even when the markets have kind of calmed down a little bit, I think you get a little bit of a premium in the volatility index, not because of any kind of fear factors, just because we know where the volatility has come from and the possibilities of how fast it could return to those levels on big moves. Well, we got one of those monster moves yesterday. Absolutely incredible. When you're talking 7% move in the Dow, that's saying a lot. You had the NASDAQ, everything was participating to the downside yesterday. It was working in concert. So NASDAQ down a little bit over 5% as well, S&P near 6%. So all of the major averages down significantly and pushed to the downside and literally left nobody. Well, that's not true either. There was one stock in the S&P 500 that actually was green yesterday, and that name was Kroger, KR. So a big grocer. So it just shows you just how much selling and how prevalent it was across every sector you look at, everywhere you wanted to look, you'd see some very, very harsh selling. So what were some of the biggest areas? Well, those that were gaining so much were the same names that were absolutely getting hammered. So industrials, you looked at Boeing. Boeing was down 16.5% yesterday. Then you look over at the financials, because we talk about industrials just for a second, but now let's look at financials, and you look at something like Goldman Sachs, Wells Fargo, Bank of America, Citi. I'm talking down 9%, 10%, 10%, 13%. Huge moves in major companies. So for all those people out there that want to say, well, you know, there's a lot of the retail is moving the markets. I would push back on that in an extreme way to say they are not manipulating. When I say they, including myself, retail is not manipulating these markets. It is a market that's had broad participation both to the upside and the downside, and the major huge money that's pushing things around. And you look at those volumes, it really does speak volumes about how big the movements are and how big those that are in the markets are pushing and moving things around. And I do not think retail is making as big of an imprint as so many other people are talking about right now. So obviously, some of the names, if the concerns are that we are starting to see some acceleration maybe in coronavirus outbreaks and so forth in some of the different areas, airlines took it on the chin yesterday as well, absolutely getting hammered. Now, they had a huge move to the upside. They're getting that huge push to the downside. Energy as well. We talk about oil all the time. Oil made this move from 17 to 40 in a blink of an eye. Well, yesterday that was pushed down back towards 36. So you can understand why you are seeing some of these moves. You look over at the OIH, you look at the XLE, some of the names that had been just sort of moving in this incredible pace to the upside, they were slowing down and they were absolutely getting pushed at a rapid pace to the downside as well. So nowhere really to hide yesterday. Let's be honest. You look around, you see 499 of the S&P 500 stocks to the downside. That's gonna say a lot. Now, Apple, Microsoft, Amazon, Facebook, all of those were hit yesterday. So as I say, broad-based pushing. Now, last Friday, huge volume day, absolutely massive in the options world. And it's why we love to be in the derivatives world, because you get to see where that smart money flows are moving around and how much participation is there and how much there is the ability to use some of that leverage and the risk side of it as well, taking off some of that risk, not putting on risk, but taking off some of that risk in how you can position if you understand how to do that well enough. And that's something that's so important. We talk about the education and understanding the derivatives market all the time. So last Friday, 47.5 million contracts. You know how many contracts traded yesterday in this 1,800 point move to the downside? Over 48 million. So we've been talking about these volumes, and these volumes are extreme. And oh, by the way, if somebody wants to say, well, Pete, hey, it sounds to me like some retail. What if I gave you a couple steps? The most active options: Apple, Boeing, Tesla, Microsoft, Bank of America, AMD, Facebook, Wells Fargo. Get an idea of these are massive names, and these are the names that are not being manipulated. So because of that, I think it's very important to understand it's just an area. The derivatives area is a great place for people to be able to express what they think in terms of how the movement's going to be, but with the time frame. That is the key element here. The time frame of the options that are being traded, that really says a lot. We've talked about this all year and how fast things are moving in the marketplace. Well, one of the things that we've emphasized for a really long period of time now has been short term. Everything is short term. You do not see very often. Now, it doesn't mean in an average day we don't see somebody going out to January, but the bulk of what we are seeing is 1 week, 2 week, 1 month expiring options. That is dominating the systems each and every day. So that huge move in volatility yesterday, as I mentioned, 8th biggest ever. That says a lot. 48% move. You don't see moves like that all that frequently either. So what's moving today? We got a big move to the upside. Nice big move to the upside, up 700, 800 points, although we are giving back a lot of that right this moment, because when we started the broadcast, we were up about 700 points. Right now, we're up about 450 points. NASDAQ up about 140 points. So a lot of that big move to the upside now starting to sift back down a little bit. And oftentimes, it's interesting to see how trade moves around as you go into a weekend. So this being a Friday, obviously, that does change things a little bit and the perspective. So is there a little bit of nervousness of, well, we got this big spike, let me take off a little bit and be a little more comfortable going into the weekend? That's sort of the mindset that oftentimes I think that we do oftentimes see. So industrials definitely having a really great day today, again, in terms of they were pushing us and leading us to the downside. Industrials are pushing us and leading to the upside. Boeing certainly stands out. Dow, Raytheon, those kind of names really pushing things to the upside. So we always like to give you a little unusual option activity. Here it is for today. So this one is something a little bit more unusual than normal unusual, because I'm going to be talking about some put buying. And we don't talk about that nearly as often, because oftentimes when we see that, it's a much more difficult read. And I'm not going to get into why that is, but it's just more difficult to read through the puts. But this is something that we hadn't seen for a while, and we were seeing this about a year and a half ago. And boy, were they right for a long period of time until they weren't. But it just continued to roll and roll and roll. So what am I seeing? So the December 7 puts had been bought in GE. Now, we talked about all the short-term stuff. These guys are going all the way out to December. So the December 7 puts had been bought. Well, those were profitable because that stock, GE, has sifted down pretty rapidly to the downside again. And so because of that, they're taking their profits off the table, selling those, but buying, still wanting to be in the trade. Just like when we see these rolls to the upside, the December 6 puts going for about 70 cents. About 43,000 of these puts are being bought. I have not done anything with these yet. Still looking at this. I've been a participant in the past where I've watched GE and this put buyer who had been out there in the past, who had bought hundreds of thousands at a time, 50,000. This is a pretty good size trade, 43,000. So this one's pretty intriguing to me and makes me wonder, is this the same put buyer from the past coming back and rolling and taking what some of the profits off the table, but still wanting to be in the trade, expecting more downside. So that's something that I think was really interesting. Now, I've talked a lot about the derivatives markets. I've talked a lot about the options world. Market Rebellion, that is our primary focus. So we're always looking and scanning and trying to follow the smart money, of course, and looking around and seeing the huge paper that's out there. But you still have to have that knowledge. You still have to have the education to really understand fully what all goes into the pricing models and what some of those risks are when you enter into trade. So that's something that I would highly emphasize. You do not want to trade until you really understand it with great depth, how the options can work and where volatility is, what the time frame is, all of those different elements that go into the pricing. That's so very important. Guys, we're committed to that at Market Rebellion. We want to get people as educated as possible before they ever put their toe in the water. So please, if you're interested in it, certainly get some education. And I think we have the best in the business here at Market Rebellion. Have a great day of trading. Have a great weekend. And got our cocktail hour tonight, 4 o'clock. East Coast time. Looking forward to it. Have a great one.